Hello everybody, so this video is entitled MSTR stock Epic Calm. Epic Calm from Sailor. Sailor tweeting a picture of him doing yoga or meditation or something. Not worried and hodl, just writing hodl. Of course, Bitcoin is crashing. Bitcoin's performance these past 4 days has been so disappointing. But MSTR stock also created something called digital credit, digital cred. This digital credit allows people to sleep well at night. And I'll get to that in a second before I talk about owning Bitcoin. And Bitcoin, unlike digital credit, which tends to be very stable, Bitcoin is the most frustrating asset to own. Ask people who've owned it for 10 years. It is the most frustrating asset to own. Why? We have markets at all-time high. Everything is rallying. NASDAQ all-time high. S&P all-time high. Even more frustrating is this. Yesterday, I published my video and I quoted Sailor. Sailor said, oh, it's all about the macro. Bitcoin will do better when the macro does better. Well, guess what? This morning, of course, everybody was worried about PCE. PCE came in good. It came in as expected. No bad surprise on PCE. So clearly, if Bitcoin was trading on macro, clearly Bitcoin should have bounced on that. As expected, the market was not spooked at all by PCE. Good news. And then, by the way, Bitcoin it's still way down as I record. This is 72,700. I told you about the macro situation in the Middle East, how, oil prices, all that sort of stuff. That's macro, that should impact Bitcoin. Well, we have yet again a piece of news. This screenshot is from about 20 minutes ago. Apparently a deal has been reached again. And I think this is, I don't know how many dozens of deals we've had so far. But, trending right now. There's a deal, apparently, going on. With like a 60-day ceasefire and reopening of Hormuz, you'd think Bitcoin would be spiking on that, right? It's not. It's responding to nothing. It's responding to nothing. It's responding to flows. It's frankly, I'm beginning to believe the thesis of manipulation more and more and more. It's more and more manipulated, especially when you compare the performance of all crypto compared to Hype. Where Hype is a token that was not distributed to the exchanges. The exchanges do not own Hype, but they own all of the other, cryptos, and they dump them. That's what they do. So anyways, strategy is actually roughly in line with Bitcoin's performance today, 1.5 times. That's roughly what we'd expect. Bitcoin's down nearly 3%, and therefore strategy is down 4.5%. That's normal. We don't have underperformance from strategy today. So anyways, is Bitcoin down because of manipulation? Well, it's tough to see otherwise sometimes. When you saw yesterday night, as always, when the markets were closed, it's always when the markets are closed that these things happen. Yesterday night, we took a major leg down, like a $2,000 leg down, from 74 to 72,000 in minutes, and we liquidated, according to Watcher Guru, $500 million of longs were liquidated in 90 minutes. So that number is probably higher than that. So we keep having, I'm going to call them mini or micro 10-10 events. You remember 10-10-25 last year, which was billions and billions. But we keep having mini manipulation events every other week or every 3 weeks or something like that. So, and yesterday, by the way, we dropped yesterday because of some negative reports on Iran. That's what triggered the sell. Some negative reports about whatever. I don't know. We don't even know what's going on over there. Like some people claim this, other people claim that. So there were reports. Boom, the market dumps, and we have very positive reports this morning of potentially a deal. Well, Bitcoin doesn't recover because I guess you gotta wait for the shorts to have a leveraged position, and when the shorts get their leveraged position, then and only then will Bitcoin recover sharply to the upside to make the shorts lose money. And it seems like it is exactly that. It seems like exchanges are doing some shenanigans. That's the whole idea of wash trading. What is wash trading is when you spook the market, when you put a giant order, but it's a fake order. You actually don't want to sell. You're buying it right back, but it's a fake sell order that hits the order book, and the market panics and dumps. But you buy it right back. It's not a real sell. It's like you're selling to yourself. You're selling to yourself to manipulate volume, to create fear, and the market is fearful. They're like, oh my gosh, there's $100 million, $200 million of someone dumping crypto. Someone's dumping. The market dumps, except that fake trade that went into the order book was someone selling to themselves, an exchange selling to themselves. And this is illegal in traditional exchanges, but it's not the case in Bitcoin. It's still legal in Bitcoin. Now, I will note that even if manipulation continues, the asset still eventually goes up, right? Because manipulation has been going on like that for a very, very long time for Bitcoin, and also manipulation likely still happens in TradFi market. So, but the frustration, I would argue, these manipulation are a cause of great frustration, making Bitcoin the most frustrating asset to own, making any gain that you make on Bitcoin probably the most earned gains that you can think of. These gains were very much earned. And anyways, so that's the story of Bitcoin today. And now I just want to talk about digital credit, of course, because this is the important part. So if you look at the past hour on Stretch, you're like, whatever, it's still doing nothing. 5 days ago was still doing nothing. If you look at Stretch over the past 5 days, we're flat. We're down 0.22%. We're essentially at the same level of the ex-dividend date, like that post-ex-dividend that Friday morning. We're at that same level. We haven't moved from the ex-dividend Friday morning. It's as though Stretch will recover back to 100 only a few days before we go ex-dividend again in exactly 16 days. 17 or 16 days. We go ex-dividend again. So that means in 12 to 13 days, roughly, is when we will be trading near 100 again, because people will want to buy it again to arbitrage and exit. And there's almost no point of people buying Stretch between the ex-dividend date and like 2 weeks into the dividend date, because when you're getting a fair return, because you would be owning it for 2 weeks. Traders don't want to do that. They want to own it for an hour. They want to own it for an hour and then sell it again and just earn the dividend, the ex-dividend date. I don't know why people do that. It makes very little sense to me. It's pennies, right? It's picking up pennies, missing the bigger story. But anyways, that's just the way it works. If you look at the volatility of Stretch, it's been flat. So one would sleep very well at night. Of course, if you look at Bitcoin, we're down 6% over the same period. We're down 6% over the same period. And I want to talk briefly about SATA. I still need to cover SATA on this channel. And I will, and I think SATA is very impressive. But if you look at SATA, they've been trading at 100 for 4 days now. They've been trading at 100 for 4 days now. Beautiful, parametric, looks like electric AC current, alternating current. Looks like alternating current. That's how beautiful this curve is. This is an engineered price action. It's been trading at 100 Stripe. And SATA, of course, is the I don't want to call it the copycat. I don't want to call it a competitor either. It's simply another digital credit, right? Another form of digital credit that is inspired by Stretch, we'll call it, because there's a few differences. But it's inspired by Stretch, kind of the same concept. It's been trading at 100, okay? And the main difference, of course, is that SATA has a 13% yield. So you see the sweet spot. If we actually wanted Stretch to trade all time at 100, maybe the sweet spot is 12% for strategy. And again, I don't really know, because I would have to assume too that if big players, if big hedge funds want to quote unquote attack or manipulate a digital credit instrument, I would assume right now SATA is too small. So of course, strategy and stretch is probably has flow dynamics that are very, very, very different from SETA. SETA is still very much flying under the hood because of its size, right? But SETA is going to grow really fast. And by the way, even if this week we're not getting much buying pressure from Sailor, that's true, we're going to get nice buying pressure from SETA. This is from stretch.live. Stretch.live is the source of this. I'm giving you my source here. Almost 2,000 Bitcoin in 3 days they already raised thanks to SETA. Almost 2,000 Bitcoin. So we're going to have that buy pressure coming into the market. And I don't know how SETA does it. I know Sailor buys as soon as they get the money. I don't know how SETA has that structured. If anybody knows in the comment section, feel free to let me know. But I need to cover SETA. That will be my next coverage. But anyways, Bitcoin is the most frustrating asset to own. If you don't want to be frustrated and you still want exposure to Bitcoin, you still believe in Bitcoin, you've read the books, you've read Saifedean, and you're a big believer in Bitcoin, but you're tired of this, you're frustrated by this nonsensical price action, then in that case, digital credit may be worth it. Anyways, it may be, right? It's not investment advice on this channel. Anyways, there is no investment advice on this channel. This was not investment advice, not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe. Follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.